Hi, Jim Hayes here, or as I like to call myself, the residential real estate investment guru, and our topic today is depreciation. Now, this is a really unique thing that we need to talk about because we're talking about an asset that's going to usually appreciate, okay? And we're going to say it routinely appreciates at 3.5%. However, the IRS, the government, through the IRS, is still going to allow us to have depreciation. Now the question is, why in the world do they do that? Well, primarily it's two reasons. One is they want you to invest in real estate. They want more people to buy homes that we can use as rental properties. That's good for the country. And it's also good for the individual because this is a good way to build wealth, okay? And the country knows that and they want you to do that. It's also good for the economy. The more houses that sell, it's better that way as well. So there's all kind of reasons they have this, but understand that they're going to let us depreciate the value of the property. Now, let's say that again. Depreciate the value of the home, not the property per se, because the lot in itself, the dirt, is not depreciable. So let's take an example. Let's say we have our $250,000 home, but we determined the lot value is $65,000, okay? So what we have to do is we have to take away the lot because the lot's not depreciable. They can't do that. So we take $65,000 off the off the $250. That leaves us with $185,000. So now we're going to depreciate $185,000 over what the IRS allows us to do, and that's 27 and a half years at this time as I'm making this video. So simply take the $185,000, divide it by 27 and a half years, and that will give you $6,727 a year that you can use as a depreciation allowance. So what does that mean to you? Well, basically in a nutshell, is as long as your cash flow is less than $6,727 a year, then the cash flow you make out of the property would be tax-free. You wouldn't have to pay any tax on it. But there's even a better thing than that. If we continue and think about this for a second, if you don't have that much cash flow, because I'll be honest with you, most of the things that we're talking about are not going to have that big of a cash flow, we could still use it and get money back in our pocket, okay? I want you to understand I'm not a CPA, I'm not a tax professional. Please talk to your CPA, your tax professional, and they can explain this to you in more detail. But I want you just to understand that if you had $6,727 a year in a depreciation allowance, if you will, and you had a marginal tax rate of 37%, which is the highest rate. Now you could have a lower one, just whatever you do, multiply it times your rate and you'll figure out what you've got. But if I multiply 6727 by 37%, that would give me an extra $2,489 in my pocket. Now, some of that would come out of what your cash flow is, and the rest of it you could actually use against other income, depending on what your income is. Again, talk to your tax professional. They're the ones that can help you with that. But it's really a unique thing about depreciation. It's really one of the main reasons people get involved in residential real estate. So just wanted to let you know, if you have any questions about anything we talk about, please give me a call or a text. My number is 214-207-9682. Again, my name is Jim Hayes. I'm the residential real estate investment guru. I look forward to hearing from you. You have a great day. Bye-bye.